Hey traders, this is Blake Morrow. You are listening to the week ahead video for November 7th, 2021. I hope you guys and gals are having a great weekend. We have a lot to talk about because of last week. Last week we had a lot of movement based on the FOMC. We had the non-farm payroll. Other central banks met last week, created a lot of volatility in the markets, which is good. That's what us as traders like. But next week we do have some important data to follow up, especially inflation data out of the U.S. So we have a lot to talk about. But before I get into all of that, let me just mention this. If you like these videos, please subscribe to our channel. It's free to subscribe to the channel. It's also free to give us a thumbs up too. So if you like these videos, please give us a thumbs up since we're filming these and editing them over the weekends. The team would really appreciate that. But I wanted to mention about subscribing to the YouTube channel because, like I said, it's free. This way you don't miss any of our videos that we do throughout the course of the week. If you don't know how to get to our free webinar, all you have to go to is ForexAnalytics.com. Click webinars right here where it says free webinar. Click there and it will allow you to register for the F.A.C.E webinar. We have it every morning. Now, it is daylight savings time or change, this weekend in North America. So keep that in mind for those of you that have been kind of thrown off kilter. You're outside of the U.S. and you haven't been able to watch the webinars. We're going to go back to normal this week. So it's 1 week of kind of a messed up schedule, but now we're going to go back to the way it normally works. So we'll see you there. Also, you can find the link to register in the link to this below this. If you're watching us on YouTube, it's down below in the description. I also want to mention, if you haven't tried out Forex Analytics, try it out. It's $1 for 10 days. You can literally join the largest, probably the most active FX and market trading community online. I mean, if you look at here, I'm just going to show you really quick. This is our chat room. This is going in a Friday. You just can go through the entire, day and just see all the people talking and chatting and all the different charts that we post throughout the course of the day. And that's just the general chat room. Then you're talking about like the trades room, news and research, where anybody can upload news and research that they might find. The Forex Flow live room, a lot of activity there. It's just an extremely busy community, and we're all traders. We're all like-minded folks. If you want to be in a place that we don't talk about religion, we don't talk about politics, and we don't allow anybody to sell any products. It's just we talk about trades in the market and sometimes what's showing on Netflix if it's really boring. But other than that, it's all like-minded people. So come join the community. It's only $1 to try it out. Also, we have a premium version product that you get to try. All right. It allows you to get access to the app, the advanced analysis, all the webinars that we do throughout the course of the day, not just the free F.A.C.E webinar, the other 3 webinars that we do throughout the course of the day. You can join those. Even if you decide to be a light version subscriber at $20 a month, it's actually $19 a month. But if you wanted to be a light version subscriber, you may not be able to access the chat room, but you still get the live webinars, the live analysis throughout the course of the day. You still get the app. You just don't get the advanced analysis that's in the app. But, for $19, it's great. So download the mobile app, join the community. I want to just show you a couple other little things that we added here just recently. This is our live blog. And our live blog is not just what you see on Twitter. There's more information that's here that you can have access to it right through the Forex Analytics platform. You got live news headlines from Live Squawk and all this great analysis that you see here through, the Elliott wave analysis on different instruments, harmonic analysis as well, on the different instruments. So check it out. I think you're going to really enjoy it. Okay, let's get to the markets. So everything right now is revolved around the S&P. And as you guys know, last week we were looking at this, 127% extension. It actually just ended up holding us for a day. It was like a little road, like a road bump, speed bump in the market. And then we surged to the 161% golden fib level. We reached it, but the problem that we have right at this moment in time, and this is something that we talked about on our webinars on Wednesday and Thursday, is we started to get very elevated in daily sentiment index. Daily sentiment index was registering around 90, 91, I think Wednesday and Thursday. And I mentioned, hey, We are now at 90. That means extreme bullish sentiment. I've seen bullish sentiment register 93, 94, 95, but it doesn't stay up here long. Once you get into the 90s, you've got maybe a day, maybe a few days, and then that extreme sentiment starts to wind down as you start to see a reversal in the market. So right now on Friday, it registered a 93, both on the S&P and the NASDAQ. So keep that in mind as we go into this next week. Also, that we're nudging right up against this, very, very strong trend line that has capped the market. I don't think we're in a bearish market. I don't. I think it's bullish. As soon as we broke this 44.30, it turned bullish. But there's a difference between being bullish in a bullish market or, hey, you're in a bullish market and you're probably at, the highs, and we might get a little bit of a pullback soon. I think that's where we're at right now. While we're above 45.50, you've got to stay bullish. So any dip from current levels, yeah, fine. Let the market dip. Maybe we'll get a dip like that into year end. Then we'll get a rally into new highs going into December. Hopefully that's what we see. And for all of us that love volatility, well, that's what we need. We need a little bit of volatility coming our way, right? So just imagine above 45.50 is bullish. But the reason why this matters, and I say everything kind of revolves around the S&P, is I really want to turn your focus to the dollar index. Now, the dollar index, we're at a really key resistance. If you listen to this webinar once a week, and let's say you don't listen to any other webinar but this one once a week, you have known that I've talked about at nauseum the importance of the 94.50 to 94.70 resistance. On Friday, the high was, let me just make sure I got my numbers correct here. The high was 94.62. The high was 94.62. So that 94.70, which is actually the spike high back here in September, that held. The 38% retracement is at 94.60 or 55 or something like that. Anyway, what you guys all should know is that that's the 38% retracement in the dollar index, and it's still here despite stocks being at all-time highs. And with the Fed starting to taper, the risk is building that we break higher above that resistance. But there's something that's happening this week that's not on the economic calendar. Do you know what's happening this week? Probably that's not on the economic calendar. Take a guess. Fed chair might be reaffirmed. Fed Chairman Powell probably is going to be reappointed this next week, we think. The market thinks as well. But what if he is not reappointed? Now, there are different options out there. I won't bore you with them right now. But the market assumes that Fed Chairman Powell is going to be reappointed. If for some reason he is not reappointed, and it's somebody that the market perceives more hawkish than, as the dove that Fed Chairman Powell is, that could be basis for the dollar to really spike up higher, quicker, faster. Okay, we could very easily move from the 38% retracement to the 50% retracement, which would be up here around 96, right? This whole area right here. We could be up there in a lickety split or within a day or two if we have a different Fed chairman step in that the market perceives as more hawkish than the Fed Chairman Powell. Now, I think he is going to be reaffirmed or reappointed or whatever the case may be. I do think so, but and the market already assumes that. But in the event that he's not, that's when that change could really spark a big move in the dollar. And that's, again, it's not on your economic calendar. I think we have to have our radar up and running going into this next week because it's kind of late in the year to be looking for a nomination, and they have to be reaffirmed. everything else. Okay, so anyway, that's something to really take into account. Speaking of other things, let's talk about what else is happening this week. So the euro dollar actually slumped to new 52-week lows. It bounced, and by the end of the day, we created a hammer. I actually still believe while we're below this trend line, it's bearish. Now that trend line comes in around 116.50. 116.40, somewhere around there. It's about another 70 or 80 pips higher than where we were at on Friday. Following the jobs report, I tried to play the dollar long. Some time after the jobs report, like I was trying to trade the euro on the short side around 115.30, and it kept just kind of grinding. It's Friday. On Fridays after jobs reports, whatever is in motion, whatever direction's in motion, a lot of times it just stays in motion. And so the dollar just kind of grinded lower throughout the course of the remainder of the session. So I just closed my dollar longs that I tried to play out, which is fine, but I still am bearish the euro. All right. And I think while we're below 116.50, we have to still keep a bearish stance. Now we get above 116.50, that might change a little bit, but we did create a hammer. Just keep that in mind. Next week, we have producer prices, consumer prices. Both big pieces of data, both Tuesday and Wednesday. Why is it so important? The reason why it's so important is that inflation data, that's what really hits the consumer, right? If you talk to the average American person, you think, okay, well, what are you worried about? Are you worried about jobs? No, jobs are plentiful. Okay, so you're worried about COVID? We're all getting our shots, or I know people have been sick. And I mean, I'm worried, but really not that worried. Great. How about inflation? Oh yeah, I'm worried about that. Right? We have on Friday, we have the University of Michigan Consumer Sentiment and Inflation Expectations, the consumer survey. Okay. We also have producer prices and consumer prices. Inflation is on everybody's mind, and if those numbers continue to be strong, which even though the market is expecting stronger core CPI, stronger core PPI this week, if they are strong and they maybe even are stronger than expectations, we could really see the dollar strengthen, because the Fed, that might become more of a concern for the Fed moving forward. So those are two pieces of important data that are coming out this week that should affect the dollar. All right. Like I said, it's what consumers globally, not just talking US, I'm talking globally. Once sentiment shifts, it's hard to put that genie back in the bottle. And once everybody believes, oh my gosh, inflationary pressures are here to stay, oh my gosh, prices are not coming down, then consumer spending starts to become, it starts to tighten. And if that starts to tighten, then especially in the US here, our economy will start to slow. And that could really be more of a global problem. You got higher energy costs, higher costs at the grocery store, consumer goods, whatever it is. When consumers start thinking, okay, it's getting pretty expensive for me to gas up my car, feed my family, I'm just going to not spend money on McDonald's or go to the grocery store, or Target, or maybe Amazon, and buy that extra little thing that I used to buy all the time. It really affects consumer spending, and that's the fear, right? That inflation continues to stay persistently high, and that is what the Fed would have to fight with, possibly raising rates or tapering faster than expected. Also, the Fed Chairman Powell is speaking. He's got a couple speaking engagements on Monday and Tuesday. I think it's a couple speaking engagements talking about diversity in the banking system, or something, one of those types of topics. He could throw out a humdinger, some sort of zinger about how he's dealing with monetary policy in the current environment. So that's something that we also have to keep in mind going in this next week. Also want to talk a little bit about the Aussie dollar, and I'm going to show you the Aussie. We actually completed a bear flag pattern. Those of you that listen to our webinars on a daily basis know I've been bearish the Aussie while we're up here at the 75.50 level. I was shorting it into strength as we were moving higher because I believe that this channel was in play. It was a great short for me. I didn't ride it out as much as I wish. I think I stopped playing it on the short side once we started holding the 38% retracement. But you notice how we completed a couple flag patterns, 50% retracement. We're halfway in the range. Now we're kind of in no man's land, but we have Australian jobs actually on Wednesday, and the market's looking for a stronger number. So if those numbers come in worse than expected because we had such a bad miss last reading, okay, then you got to be a little careful there. Unemployment rate is expected to move higher this next week. It's reading. But also the employment is supposed to bounce back. So watch the Aussie. I think like I said, we're kind of in no man's land at a 50% retracement. It was a great short. I probably wouldn't mind shorting it again on a move back up here towards 74.50. That previous support should act as current resistance. I wouldn't mind being short on any rally, towards that resistance going into this next week, maybe even into that jobs report. So that's a little, flavor of things that I'm thinking about going into this next week. But I wanted to say, guys and gals, if you like these videos, make sure you give us a thumbs up. Make sure you subscribe to the channel. See myself and the rest of the team on Monday on the F.A.C.E webinar. Remember, we're reverting back to our normal times, even though my times never change because my clock doesn't change. Yours does. So keep that in mind going into Monday. I'll see you on the F.A.C.E webinar with the rest of the team. Thanks for joining myself today. Thanks for spending your time with me. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.